Today's presentation is on the best semiconductor stocks, and I think everybody will have a different definition of what best means. But today we're going to cover a number of things. We're going to start by finding a list of semiconductor stocks, a universe. Then we're going to talk about types of semiconductor stocks, the three major semiconductor ETFs, investing in Intel, which a lot of you have asked about, whether or not you should look to invest in an ETF or stock pick or neither. We'll talk about finding the next NVIDIA, and then two semiconductor stocks we're going to briefly discuss that are on our radar throughout the presentation. So before we get started, please go ahead and click in the lower right corner of the screen. Click that subscribe button, and that helps support our channel. So let's start by talking about something referred to as GICS. That stands for Global Industry Classification Standard. And I spent a decade working at the company that helped S&P 500 come up with this, and it's a method of classifying companies according to what they do. It's really nifty. So here you can see on the upper right the pyramid. So it starts at 11 sectors. Then below that you have industry groups. Then you have industries. Then you have sub-industries. And I put some examples here on the left for the oil industry. And in this manner, you can classify securities. Of course, sometimes that's difficult, right? Because you have to figure out what a company does. And we often do that here at Nanalyze when we try to figure out which companies are pure plays on a particular theme. So one of the things that you can do then is find the semiconductor classification for companies and see what lives under that umbrella. Now, with GICS, it's quite interesting because every once in a while they'll have consultations with the investment community and they'll make some major changes. For example, right now we're doing an update on our Quantigen's dividend growth investing report, and ADP is a company we happen to be invested in, and we noticed that it was moved from information technology to industrials. Seems odd, but then here you can see an explanation for that. And they don't change GICS classifications very often, but when they do, these are very well thought through changes. So that's one example of a change. And then at the bottom here, you see they reclassified sectors. So there used to be 10 GICS sectors, and then they added one called real estate for REITs. So quite interesting. So that's how GICS works. If you ever want to figure out what a company does, you can look up their GICS code. For semiconductor stocks, those live under the information technology sector that you can see here. We've highlighted at the top. And then below that, you can see two categories we're interested in: semiconductors and semiconductor equipment. So if you wanted to invest in semiconductors in the most pure play way possible, you would find all stocks that live under that code. And to get that information, usually you have to subscribe to one of MSCI's data products, and they're not cheap. I think when I was working there, our base product was somewhere around $50K for developed markets and $50K for emerging markets. That would give you these data points. Now, for types of semiconductor companies, I think the GICS classification, as is often the case, doesn't give you enough granularity. And I've put up some examples of the types of semiconductor companies you'll come across. You have silicon wafer manufacturers like Shinetsu Chemical and Sumco. You have integrated device manufacturers, that Intel would be considered one. You have foundries. These are the companies that actually manufacture chips, the biggest being Taiwan Semiconductor Manufacturing Company, or TSMC. Fabless, these are companies that design chips but outsource all the manufacturing. Then you have the test equipment for building chips. You have Teradyne as an example there. Design software, Synopsys, and solar equipment also gets classified under semiconductors, and one example would be SolarEdge. Now, this Forbes article I put up because it's a good example of how obscure some of these companies are, how complicated this mature industry could be. So the world's largest producer of silicon ingots, that's a commodity. We don't like to invest in commodities, is this company Shinetsu Chemical. And then the other significant player is also a Japanese firm, and you can go look these up. They have all their information is in yen, so it starts to become difficult to navigate, but they're traded on Japanese exchanges, and you could invest in these companies. Another thing that you could do is simply look for an ETF to invest in, and I've put up here the three biggest semiconductor ETFs based on assets under management. So that's a sizable amount. You see the VanEck Semiconductor ETF there at the top with $6.4 billion. Not far behind it is iShares Semiconductor ETF with $5.9. Now, when you look at these two ETFs, they appear to be similar in that they're both trying to capture exposure to the top semiconductor firms. We'll talk about that third one in a second. But top semiconductor firms, however, when you look at the weightings, you see something quite different. Now, one of the reasons for this is that both these ETFs use different index providers. So the underlying index is different, and there are also some weighting rules that are different here. So you can see here that if we take the top 15 constituents from either ETF, 14 are the same. So you're pretty much getting the same exposure, but notice how weightings are quite different. Also notice that the VanEck Semiconductor ETF contains a name synopsis there that we had mentioned before, that software play that got worked into there. They were able to see that perhaps that isn't classified as under the GICS classification as being related to semiconductors, but that's all they do. They sell software to semiconductor firms. Now, when we look at VanEck's ETF here, you can see how the market caps, which are reflected in the right column there, those market caps are listed. This is listed by weighting, so it fairly matches the weighting. In other words, it's a market cap weighted index. That's a common approach taken by firms like MSCI, is you just weight by market cap. So the biggest companies have the biggest weighting. You can see here this tracks the Semiconductor 25 index, which is intended to track the overall performance of companies in semiconductor production and equipment. But look at the next ETF from iShares. Look at how different this is. So we've also listed this by weighting, but look how the market caps don't reflect the weighting. So at the bottom there of the 15, you have Taiwan Semiconductor Manufacturing. It's the biggest firm in terms of market cap, but it's also in 15th spot. So iShares here is what they've described as a rules-based modified float-adjusted market cap weighted index. They're doing some different methods of calculating weightings there. Now, I also pulled up this table from Gartner that's quite interesting, which shows the size of the industry in terms of what they describe as semiconductor vendors. And you see all the familiar names there, Samsung, Intel at the top. And they say here that the industry surpassed $500 billion for the first time in 2021, and that by the end of this decade, so by 2030, they're expecting that to double to $1 trillion. So the growth of chips. On the right-hand side there, that's quite interesting. You can see revenue growth for all these firms. Look at how strong growth has been for NVIDIA and AMD there towards the bottom. But at the top, look at how Intel is running into some problems. So let's talk about why that is. A lot of you have asked questions about Intel, and I think that's because this company has a very powerful brand. So when you think about a share price being beaten down, you see that in the news, you think, well, there's a bargain to be had picking up a great chip company. Well, before you decide to invest in Intel, you ought to be able to describe what they do. And I looked through probably 50 different slides from the company that were full of acronyms and buzzwords, but this one I think works quite well. And you can see here where they're expecting growth to come from in the emerging classification there. That's what we're interested in. So we're not interested in legacy Intel, right? We want to see growth. That's what we invest in, growth companies, at least in our tech portfolio. So you see here they have 3 categories where they expect to see growth from at the top: Foundry, Mobileye, and AXG. So when it comes to Foundry, this is where they want to start competing with firms like Taiwan Semiconductor Manufacturing, and this seems to focus on the language coming from President Biden's administration about the U.S. returning to dominance in chip making and whatnot, reducing their reliance on Taiwan Semiconductor. Of course, with the tensions there in China, that's always a risk, and you need to consider that as a semiconductor investor. And here, we see Foundry as being something that's going to be very difficult for Intel to start to capture market share in, just because of the competition's well entrenched. When it comes to Mobileye, well, we'll just buy shares of Mobileye if we want that exposure. And then AXG, that refers to their graphics processor units, GPUs. We talk about those a lot, right? That's what made NVIDIA the success story that it is. And here at the top, you can see NVIDIA's strong market share in GPUs. And Intel has split that division into two sections, high performance computing and GPUs, which they want to start to compete with AMD and NVIDIA in a more formidable fashion. That's going to be very difficult. We don't like companies that show up late to the party. So Intel isn't a firm that we would consider investing in. Now, when it comes to investing in an ETF or trying to pick a stock, semis are very heavily covered by analysts. This is a mature industry. So you're going to find a lot of conflicting opinions about future growth direction. You need to ask yourself, do you want to try to beat a benchmark such as the VanEck ETF, or do you want to try and cherry pick a stock? Now, we don't invest in ETFs. That's a rule, at least in our portfolio, that forces us to make active bets. And in looking at our current portfolio, about 17% of our exposure is to semiconductors. So the biggest portion of that would be our position in NVIDIA, which we've been trimming for a while. We covered our cost basis in 2021 at least 7 times over, and we're still trimming that, and it's still our largest position. So when we completely exit NVIDIA will be when growth stalls. And I put a link to an article where we talk about that in the description of this video. So when it comes to finding the next NVIDIA, we don't like using terms like that, finding the next Microsoft, finding the next Google, but it's fair enough. Finding the next growth play in semiconductor stocks. When you look at NVIDIA, the performance is really unmatched, and you can see here, this table is quite interesting. So first of all, you can see NVIDIA clearly outperforming at 5-year, 10-year, and 20-year intervals. But look at the 20-year interval for the VanEck ETF. It actually underperformed the NASDAQ. So if you made a diversified bet on semiconductors, you would have underperformed the NASDAQ. In other words, you'd have taken more risk and received less return for that. So it's important to note that semiconductors aren't just a gimme when it comes to outperforming a benchmark like NASDAQ. So the way that we found NVIDIA and invested in that, and it ended up being our largest position, was that we started with a theme and then we tried to identify the leader. In other words, we said, well, AI is growing like mad, so we want to find who the leader is in AI chips, and that led us to NVIDIA. So other themes that you might consider in a similar fashion, you have IoT sensors. Well, that's clearly ARM as the leader, and they're being passed back and forth. I think a Qualcomm consortium now is looking at acquiring them since NVIDIA failed to do that. That's a strike against NVIDIA. You have autonomous driving chips. That would be Mobileye, seems to be the leader there. When it comes to software in semiconductors, that's Synopsys. We're really interested. That's one of the 2 stocks that we like, actually, and are looking at. If we sold NVIDIA, then we may want to add some more semiconductor exposure. That would be one that we would look at. Then you have other themes like 5G, robotics, and of course, broader IoT. So the key, of course, with NVIDIA is figuring out when to exit. Now, when we look at trying to find the best semiconductor stock, when NVIDIA had their IPO, they had a market cap valuation of $626 million. That's actually under our $1 billion cutoff. We only invest in companies that have a market cap of $1 billion or greater. But you could see that NVIDIA started out quite small and then grew to where they are today. So a lot of our subscribers have been asking about smaller companies in the semiconductor space that may have a lot of growth potential. So what we're going to do next is, you can see here, we've broken down the 3 semiconductor ETFs by size. You can see that third one that we didn't talk a lot about, XSD. That has quite a bit of mid-cap and small-cap exposure. So what we're going to do next in this series of articles and videos is we're going to look at trying to find any interesting names that might be in that ETF. We're going to look at NVIDIA's stalling growth going into next year. And we're going to revisit 2 names that we like, which are Synopsys and Mobileye. We're also going to touch base with a semiconductor firm that we're holding called Teradyne. So just to conclude, when you're looking at investing in semiconductors, figure out what you want. So do you want semiconductor exposure because you're bullish on semis? Well, just pick up an ETF. Do you want to find another NVIDIA success story? Well, that'll be difficult to do, as it is trying to generate alpha, period, but you may start by establishing a universe, as we've done today, and screening through that, which we'll do in a future piece. Or do you just want exposure to a large total addressable market disruptive technology theme? That's how we found NVIDIA, and that's probably the approach that you ought to take. So companies like Intel that missed the boat, probably shouldn't give them a second chance, though a firm like Umbrella might be an example of a successful pivot, but that doesn't happen very often. You see now Intel is playing catch up. So go ahead and click this logo on the right, please. Subscribe to our channel. And also, I've put up a video here on the left about NVIDIA that you might find interesting. Thanks for taking the time to watch this today.